Welcome to the Margin of Safety Investors channel, where we dive deep into long-term investment opportunities with a focus on risk management and durable business models. Today, we're looking at Ulta Beauty, the largest beauty retailer in the United States. Ulta Beauty, founded in 1990 and headquartered in Bolingbrook, Illinois, is currently led by CEO David Kimball. As of 2023, the company boasts a market capitalization of $17.4 billion and an enterprise value of $17 billion, supported by a $400 million net cash position. With 1,411 stores across the United States, Ulta generated $11.2 billion in sales in 2023, solidifying its position as a dominant player in the beauty retail space. Ulta's business model revolves around offering a diverse range of over 25,000 products from around 500 brands. These include cosmetics, fragrances, skincare, and hair care, along with salon services. What differentiates Ulta from competitors is its ability to cater to both luxury and budget-conscious consumers, providing a shopping experience that allows customers to explore products without needing assistance. This unique approach blends the convenience of a department store with a vast product selection, making Ulta a go-to destination for a broad range of customers. Ulta competes with Sephora, but differentiates itself by offering more affordable and diverse products across categories like nail polish and men's grooming. While Sephora is owned by luxury giant LVMH, Ulta's broader inventory caters to customers of all income levels, positioning itself as a go-to beauty destination for everyone. Now let's shift focus to one of Ulta's most significant business drivers, their loyalty program, Ultimate Rewards. This membership program is essential to the company's growth, as it not only boosts revenue, but also strengthens customer loyalty. Ulta's program has amassed over 40 million active members, which is a massive number compared to other well-known brands. For instance, Starbucks, another major consumer brand, has around 31 million active rewards members in the U.S. Let's take a quick look at the analyst ratings for Ulta Beauty. UBS has a buy rating with a target price of $470, reflecting their confidence in Ulta despite trimming their price target due to updated guidance. Morgan Stanley rates Ulta as equal weight with a $400 target price, noting concerns about EBT margin pressure, but waiting for a better entry point. Guggenheim remains neutral with no target price listed, acknowledging Ulta's strong positioning but raising concerns over market share capture and long-term growth uncertainties. Bank of America also gives a neutral rating with a $380 target price, pointing out that increased competition from Sephora and Kohl's stores is pressuring Ulta's market share. These varied perspectives highlight both the opportunities and the challenges facing Ulta Beauty in the current market environment. Now shifting focus to Ulta's most recent financial results for Q2 2024, reported on August 29, the key takeaways are in net sales and operating margins. Ulta's net sales came in at $255 billion, slightly up from $253 billion in Q2 2023, but comparable sales decreased by 1.2%. On the margin side, Ulta's operating margin dropped to 12.9% from 15.5% in the previous year, reflecting some margin compression, which aligns with the concerns raised by analysts. Following the financial overview, it's important to note the CEO's insights on the decline in operating margins and comparable store transactions. David Kimball, CEO of Ulta Beauty, addressed this in the Q2 2023 report, attributing the decline to four main factors. We attribute the decline in comp store transactions to four factors. First, while the beauty category remains resilient, growth is normalizing after 3 years of unprecedented gains. Additionally, consumer behavior is starting to shift as consumers increasingly focus on value and become more cautious with their spending. Based on data from Circana, U.S. beauty growth slowed to approximately 3% through the first half of 2024, with prestige beauty experiencing high single-digit growth and mass beauty maintaining low single-digit growth. Second, competitive intensity in the beauty category remains high. As we have shared previously, the strength of the beauty category, combined with an attractive margin profile, has drawn substantial and diverse competition to the category. Today, there are significantly more places to buy beauty, especially prestige beauty, with more than 1,000 new points of distribution opened in the last 3 years. As a result, our market share continues to be challenged, particularly within prestige beauty. This clearly highlights the challenges Ulta faces, especially in maintaining growth momentum amid increasing competition and changing consumer behaviors. Looking ahead, Ulta Beauty's management has set clear long-term financial targets for 2026 and beyond. The company is aiming for 4% to 6% net sales growth annually, mid-single-digit operating profit growth, with operating margins targeted around 12% of net sales, low double-digit diluted EPS growth. Ulta Beauty is also gearing up for its first international market launch into Mexico in 2025 through a joint venture with Grupo Axo. This expansion marks a significant milestone for the company as it plans to scale up to 100 stores across Mexico over the next few years, leveraging its successful U.S. model to attract a broader customer base in Latin America. Looking at Ulta's current valuation multiples, we can make a few important observations. Forward PE is at 15.02, below its typical range of 18 to 20, indicating that the stock is trading at a discount compared to its historical averages. This suggests that the market is pricing in some uncertainties regarding future growth. Forward free cash flow, FCF yield, is at 6.27%, which is the highest it's been in the past 2 years. This implies that Ulta is generating significant free cash flow relative to its market value, making it attractive to cash flow-focused investors. Forward EV/EBITDA is at 10.63, close to a 2-year low, signaling that the stock is trading at one of its most attractive levels based on this multiple in recent times. These metrics highlight that Ulta is currently valued at more favorable levels, offering potential opportunities for long-term investors. Now transitioning to the consensus estimates, the outlook for Ulta Beauty appears quite prudent. Sales growth is expected to be 4% to 5% over the next 2 years, which is relatively modest given the company's historical performance. This slower growth is likely due to increased competition and the potential ripple effects from rising cost of living pressures on consumer spending. Additionally, we see a forecast for decreasing margins, with the operating margin projected to fall to 11.63% in 2025. As for the trading multiples, they look fair at current levels. However, let's consider a scenario where Ulta is able to defend its margins and achieve a 15% operating margin by 2026. At the current consensus sales numbers, Ulta would then trade at 9.2x EV/IBT, which looks rather appealing for a company of this scale. So the key question remains, will Ulta be able to defend its margins over the next few years? What do you think? Please share your thoughts in the comments below, and don't forget to subscribe for more company analysis. Disclaimer: this video is for educational purposes only and is not financial advice. Always do your own research before making any investment decisions. Thanks for watching.